Stocks move lower after recovering from an early dip following the US Federal Reserve's stance on fighting inflation. Banks hold out, IT and autos correct, while the mid-caps marginally outperformed today.
M&M Financial jumps on a strong pickup in disbursals, while a steady performance and bright outlook support Dalmia Bharat, but a sharp drop in profitability sees Relaxo take a step down.
Bhujia maker Bikaji Foods and hospital chain Medanta launched their initial public offers a day after Fusion Microfinance opens its issue. The recent market resilience is helping fire up the IPO market.
And Fed Chair Jerome Powell's hawkish comments revive memories of former Chair Paul Volcker, say experts. They now dismiss a quick pivot but expect India's strong fundamentals to keep it resilient.
Hello and welcome to Business Lunch. I'm Nisha Podar and as always with me is my co-anchor Pavitra Parekh. So Pavitra, we've been discussing that 18,000 level for Nifty 50 and it's just holding on to that particular level by the teeth. In fact, just defending that 18,000 level but struggling to stay on those levels. So it opened below 18,000 level today, then limped back about 150 points recovery and then is giving way again. So at the moment on our screens, just about holding on to 18,000 flat level. 0.4% down in trade at the moment, 70 points cut for Nifty 50. When it comes to sensex, it's over 200 points lost on sensex. But Bank Nifty, the banks are resilient today despite the US Federal Reserve's deep cut. Was given to the US market after the interest rate hike, and also the commentary coming in on fighting inflation. So banks showing a huge amount of resilience, outperforming the key indices today, and some of the key banks like Axis Bank, SBI, and some of the other financials and even Bajaj Auto, Bharti Airtel are the ones adding to the momentum. Tata Steel also seeing some bit of buying after the kind of muted performance it saw after a dismal results. All right, on mid-cap front, that's also holding almost flattish to green at the moment, clearly outperforming the key indices. Advanced decline ratio in favor of the declines, but slightly neck and neck. Pavitra.
Hi, Nisha. Good afternoon. So, like you pointed out, we are seeing a little bit of a red screen, and this is after the kind of recovery that we saw after the morning dip, right? But considering the kind of cuts that we had in the morning on the SGX, perhaps another dip was not completely unexpected. For now, we're still looking a lot better than what's happening in the rest of Asia. So, Hang Seng is down almost 3% right now. Taiwan also up on your screen, 0.9% gone there. So, of course, our market's still looking much more resilient. Nisha was pointing to the banks. Let's pull up some of the smaller banks so you can see the extent of the move. You have something like a Karnataka Bank after the massive 20% rally yesterday. It's up another 8% today. You have PNB, IDFC First. I'm just naming a few. They're all doing quite well. On the downside, it is all about IT. There was a over 3% cut on the NASDAQ, which is what is reflecting on the entire pack of IT stocks. Some of the auto names have also found their way there. And now with this big Q out of the way, focus really shifts to Friday because we'll have the US non-farm payrolls data out. So that is the next big Q to watch for, where the markets could go. But that's the market action. We'll keep coming back to this. First up, let's begin by talking about some individual stocks which are in focus. M&M Finance surges after reporting its best asset quality numbers in over 3 years. Disbursals are also looking solid at a 16-quarter high, and the management remains quite bullish on the growth outlook going forward. Vice Chairman and Managing Director Ramesh Iyer spoke to us earlier. So listen in to what he had to say.
Clearly, maintaining a 10,000 plus crore disbursement should not be a challenge. The second half for rural is the best half. And fortunately, the monsoons have been good. Support prices seems to be good. Infra is opening up. So we are very, very positive in terms of the trends that we see in the rural market, both from demand as well as from the collection front. AUM, we are already clocking 15-16% growth, and the disbursements are more aggressive as we see from the numbers. So therefore, maintaining this kind of a double-digit growth on the AUM should not be a challenge again.
All right, that was the business outlook coming in from Mahindra and Mahindra Finance. Let's shift focus to Varun Beverages, which reported a strong set of second quarter numbers. In fact, the revenue is up 32% this quarter, while India organic volumes grew about 22%, and the international business saw the volume growth of 31%. In fact, the management of Varun Beverages, Ravikant Jaipuria, the chairman at the company, joined us earlier today and said that the growth prospects were looking promising for the company going forward. Take a listen.
We've had a great 9 months going forward, and as you see with the markets opening up and the Diwali and the holiday season starting, we've had a great start, and the fourth quarter is also looking quite promising. Double-digit growths look very possible, and we definitely believe we should do better than that. Well, we are one of the highest margin players in the world, and I think to expect better margins than what we are getting will be really asking for too much. If we can sustain these margins going forward, we should be quite happy.
All right, that is the management of Varun Beverages. They're sounding very optimistic about the growth outlook going forward. They're targeting double-digit growth for the company. But with that, let's shift focus to some primary market action, but we'll keep it with the snacking space. India's third largest ethnic snacks maker, Bikaji's 880 crore IPO, open for subscription today. And the management, apart from bringing us a whole bunch of tasty snacks to our studio, also told us about the company's growth plans post the IPO. So let's listen in to what they had to say.
If you're at 45% utilization levels, at peak you can do 3,500 crores.
So
is that a fair estimate?
We can comfortably, so in ethnic snacks, special snacks, we can comfortably do it at level, at current capacity.
3,500 crores, or is it
very
more?
comfortably?
Very comfortably.
Do you, compensate for the ad spends? Because I'm sure you're seeing a lot of competition from the likes of Haldirams, etc. Will your ad spends as a proportion to your sales go up in the quarters to come?
In last 2-3 years, we've done ad spend of close to 1.752%. Yes. Right? And that's a number we have always parked on in our P&L. And we are one of the highest ad spend in our segment, in our sweet savory segment. Yeah.
Okay, all right. Two-part question then, and I think for your business, the distribution is more important, if not as important as the ad spends, because distribution, your reach is very, very important. So a couple of questions. Now, palm oil prices have cooled off. Yeah. Various input costs as well have cooled off. You're looking at scaling up.
Yes.
So you can't give us a number, but second half of the year, margins will improve in comparison to the first half. And also exports, well, we also want to enjoy the namkeen, but I think the export market as well has opened up. It's around 5% of your revenue. Where do you see that number headed to?
See, basically in first quarter, it was toughest for across all the food brand in India. So we had done a bit of close to 7.3, 7.4%, which was toughest actually, where edible oil was at 150 or 160 rupees a liter. And post first quarter, we have seen cooling off across all edible oil, key pulses or paper prices also cooled off, crude is also cooled off. So we are seeing good numbers in. We are coming at normalized EBITDA. That's what it looks like.
So normalized will be what, towards double digits? Will it be high single digits? On we are not getting a guidance from you. We are asking you what is the normalized number.
So yeah, of course, it's a double digit type of.
All right, so that's the bhujia maker coming up with an IPO. You know what, Pavitra, being a North Indian myself, in whole of North Indian belt, bhujia is just such a famous savory.
Yeah.
And in fact, during COVID times when we were having insipid home food, bhujia was a huge thing in demand, even as an accompaniment to daily meals.
Yeah.
So I know that what is the importance of bhujia as a snack in the Indian
everyone loves
household.
it because the newsroom has demolished everything that they brought to the studio.
Yes, all this fad about healthy eating can just stay, but Indians are foodies by nature. All right, to another IPO corner story then, the IPO of Global Health, which really operates the Medanta chain of hospitals, also open for subscription today. And Ekta Batra, our in-house healthcare expert, is joining in with all the details. Tell us, Ekta.
Thanks for that. Well, not as exciting as the food IPO. Medanta is open for subscription though from the 3rd of November till the 7th of November. Price band of 319 to 336 rupees, looking to raise over 2,000 odd crores, up to around 2,200 odd crores. The implied market cap for Medanta would be around 8,580 to over 9,000 odd crores. It's a combination of a fresh issue as well as an OFS. So the fresh issue is around 500 odd crores. OFS is up to around 1,700 odd crores, with the likes of Carlyle, which had exited, or rather which had entered the company in 2013, looking to exit entirely. They've already struck a pre-IPO deal worth around 6% of their equity, and with the OFS, they are expected to exit the company entirely. Fund utilization, 375 crores will be invested in subsidiaries, which will eventually be used for the fund repayment of debt. Now, about the company, it is a Dr. Trihan promoted chain of hospitals. He's a very renowned renowned cardiac surgeon. Separately, it operates around 5 hospitals across the brand Medanta, but it is focused basically in the north and the eastern market of India. Over 2,400 odd beds, one hospital which is coming up in Noida. Now, a couple of key points. What works in its favor is that it's a strong doctor promoter name which is actually driving the brand. Occupancy rates have the potential to improve. It was around 59% in Q1 of FY23. Average revenue per occupied bed has improved for the company to around 60,000 rupees. International revenue is expected to pick up. It was at a peak at around 11 to 12%, came down to 4%, currently at around 6% odd. New verticals are at a nascent stage, which include the likes of home care, pharmacy. The company is also exploring diagnostics as well as digital, and the company is looking to expand bed capacity as well. Margins as of Q1 FY23 were within the range of around 20 to 21 odd %, and revenue was up around 27% as of Q1. There's been a lot of interest in the entire hospital space, especially post-COVID, with electives picking up. In terms of valuations, Medanta is at around 18 times EV to EBITDA, and it is less expensive than its peers such as Apollo as well as Narayana on an FY22 basis.
All right, Ekta, thanks a lot for taking us through all of the details. So clearly there's a lot of primary market action going on. We also had Fusion Microfinance, which opened its IPO yesterday. So that's really a roundup of what's going on there. But with that, we'll get into our first short break on the show. Up next, the US Fed raises rates by an expected 75 basis points, but a hawkish Jerome Powell quashes hopes of a pivot. The Bank of England will also announce its rate decision later today. So all of the details when we come back. Welcome back. You're still tuned into Business Lunch. Now, the key news point for markets overnight was the US Fed's rate decision. The FOMC raised rates by the widely expected 75 basis points, but a very hawkish-sounding Jerome Powell quashed hopes of a pivot, saying that incoming data still suggested that inflation remains sticky and that the ultimate level of interest rates could actually be higher than they previously expected. So let's listen into some of those important comments.
I don't have any sense that we've over-tightened or moved too fast. I think it's been good and a successful program. That we've gotten this far this fast. Remember, though, that we still think there's a need for ongoing rate increases, and we have some ground left to cover here, and cover it we will. We'll want to get the policy rate to a level where it is where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though. We're now 18 months into this episode of high inflation, and we don't have a clearly identified scientific way of understanding at what point inflation becomes entrenched. It used to be that you would raise the federal funds rate, financial conditions would react, and then that would affect economic activity and inflation. Now, financial conditions react well before, in expectation of monetary policy. That's the way it has moved for a quarter of a century, is in the direction of financial conditions, then monetary policy, because the markets are thinking, what is the central bank going to do? If we were to over tighten, we could then use our tools strongly to support the economy. Whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched, and the costs, the employment costs in particular, will be much higher potentially. So from a risk management standpoint, we want to be sure that we don't make the mistake of either failing to tighten enough or loosening policy too soon. I would say a big channel is the labor market, and the labor market is just very, very strong, very strong. And households, of course, have strong balance sheets. And so we go into this with a strong labor market and excess demand in the labor market, as you can see through many different things, and also with households who have strong spending power built up. So it may take time. It may take resolve. It may take patience. It's likely to get inflation down. I think you see from our forecasts and others that it will take some time for inflation to come down. It'll take time, we think.
All right, it will take time. That is the word from Jerome Powell on the inflation from here on. But in fact, we also got in some comments from former RBI Governor Raghuram Rajan on the Fed's rate hike. So let's listen into that as well.
This was expected. The Fed raised interest rates as expected. But Chairman Powell also came in with, slight mollifiers for the market. Yes, over the next meeting or two, we will start slowing the pace of rate increases. But we're going to go higher than you expected. Because, he did say that we haven't seen much of an effect on inflation yet, and the labor market is red hot, so we need to do more. I think the one additional piece of dovishness was we don't need to see inflation come down significantly before we slow the pace of rate hikes. So that, for a while, the market took some comfort from that. But in general, it was relatively hawkish. Well, I don't think even the Democrats, if they held on to one or both of the houses, would really have large new spending plans underway. Given the high inflation, given that some of the Democratic senators are against significantly more spending, I think even they would be circumspect. But I think with divided government, I think big fiscal spending is certainly completely off the table. And to the extent that that helps the Fed, yes, that's certainly right. I think what is important going forward, however, at this point is fiscal itself, even if it just runs as it is running right now, is becoming more contractionary. Again, another point that Chair Powell said.
All right, some important comments there coming in on U.S. Federal Reserve's move last night. Now, the U.S. Fed Reserve is not alone, though. The Bank of England is expected to also raise interest rates by 75 basis points today. Its largest, remember, rate hike since the year 1989, so it's going to be historic. However, the economists believe that policymakers will strike a more dovish tone looking ahead as the prospects of a recession deepen. So again, to the whole conundrum of growth versus inflation. In fact, CNBC's Arabile also gets us an update on the Bank of England's bond auctions and rate hike expectations.
On Tuesday, the Bank of England became the first major central bank to sell off assets accumulated during its 13-year-old stimulus program. Now, the Bank of England received solid demand from investors at its first auction to sell those government bonds. It does aim to sell £6 billion of gilts across 8 auctions in November and December. This makes the central bank a test case for how quickly markets can shift away from easy money policies. Let's remember that the UK central bank was buying government bonds as recently as a few weeks ago. This was aimed at soothing markets after the mini-budget here in the UK roiled the gilt market in late September. But more stability since the departure of Liz Truss from 10 Downing Street means the central bank may not have to raise rates by as much this week, with a 75 basis point hike still expected. The bond auctions are aimed at reversing that quantitative easing program that helped prop up the economy through the global financial crisis, as well as the pandemic. Quantitative easing did see the BOE buy bonds in financial markets to push interest rates to near zero, with hopes that easier money would give investors confidence and help foster growth. The Governor of the Bank of England, Andrew Bailey, will hope, however, that reversing quantitative easing, dubbed quantitative tightening, can run in the background and leave the focus of the Bank of England's benchmark lending rate as the main tool of managing monetary policy. The sales do come at a delicate moment for the Treasury and Bank of England, which both have pivoted away from stimulating the economy toward restraining inflation, which has surged to a 40-year high. That's left analysts and industry surveys suggesting a recession could be underway.
All right, thanks a lot for all of those details. We'll, of course, keep you posted with the central bank action. But with that, it's time for another short break on the show. On the other side, we should focus and talk politics. Elections to be held in Gujarat on the 1st and 5th of December. More details on that after this short break.
Welcome back. You're watching Business Lunch. A quick look at the market, just about holding on to the 18,000 levels. In fact, if it was not for some of the top 3 banks which have gained more momentum in the last 20 minutes of trade, like ICICI Bank, Axis Bank and SBI, Nifty 50 would have given up on the 18,000 level. So at the moment, just about 50 points gain on that. But we'll take a look at Bank Nifty. That has seen more buying coming in and 0.55% up in trade at the moment. But IT continues to be on the weaker side and weakens further. Well, talking about the tech space, well, messaging service WhatsApp has announced the new features which are set to be rolled out in the next few months. It could be really of huge interest to all our viewers and all of us who use WhatsApp every day. So Ashmit is joining us with all the details. Ashmit.
Well, India does make up one of the largest markets as far as WhatsApp is concerned, and Mark Zuckerberg today announced a whole host of measures that could, in fact, be critical as far as the Indian market is concerned. What are some of these new features? Well, one of the features that is thought to be introduced is a communities feature. This will serve as a group of groups. So similarly placed groups can be put under one umbrella group. The facility that will be available is that the administrator can post messages across groups, and individual members of these groups can hop in between these groups to, in fact, get the updates from various groups. And this is the broader communities feature that will be rolled out. What is also, in fact, another feature that is being rolled out is that so far, the individual files that are sent, the data limit on that is 100 MB. This is sought to be increased to 2 GB. So that is a key feature that WhatsApp feels will set it apart from some of its competitors. Another key feature that is expected shortly is allowing as many as 32 people to join a single video call. Till very recently, we had seen the limit at 8. Similarly, the size of the group itself, the limit initially was at 512. It is now sought to be increased to 1,024 members per group. And finally, WhatsApp is also seeking to introduce a feature of allowing polls within a group that would allow the members of the group to cast their votes. So these are some of the new features that WhatsApp is expected to roll out. They've not given a very specific timeline. What they tell us is that in a period of weeks to months is when these features will be rolled out globally.
All right, Ashmit, thanks a lot for getting us all of the details. But with that, let's talk about the much-awaited assembly elections in the state of Gujarat. Polling will be held in 2 phases. This will be on the 1st of December and then on the 5th, and results will be out on the 8th of December. So the polls will witness a 3-sided fight between the BJP, the Congress, as well as the Aam Aadmi Party. Now, remember, Gujarat has been in the strongholds of the Saffron Party for nearly 3 decades now, and of course, the BJP aims to maintain that this time as well. The Congress is also trying to reclaim power in the state. And finally, we have the Aam Aadmi Party making inroads into a western state after they saw that landslide victory in Punjab and a lot of their recent forays as well in states like Goa as well as Uttarakhand.
All right, and just a word on Bank of India. It's gaining in trade because the asset quality has improved and also net interest margin has improved. But next show is going to take forward all the market action as well as the earnings. That's a wrap on Business Lunch. Thanks so much.